All right, hi everyone. Welcome to today's webinar brought to you by IC Markets. Just give me a sec while I get things going. All right, okay, hang on a minute. All right, just want to make sure you guys can hear me loud and clear. All right, hi, morning, Nick. All right, okay, I assume you guys can hear me as well clearly. All right, okay, sure. Good morning from us. Yeah, all right. Definitely we'll start off with dollar index as well. We'll look at the major currency pairs. We'll even look at Bitcoin today as well for sure, Nick. All right. All right, perfect. Thanks a lot, Nick. All right, great. All right, okay. And just want to make sure everything else is up and running. All right, okay. Right, before we start, let's go through the disclaimer. Right, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. All right, so just a simple agenda for today. We'll just quickly look through the key events that are coming up for this week and how they could potentially impact the markets. Then, of course, we'll start the analysis on the majors. We'll start on the dollar index first and then major currency pairs. And of course, we look forward to your custom requests as well. Right, so my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, so here, okay, just let me check the chats, everything coming in. All right, hi Ren. Yes, yeah, definitely we'll cover the majors as well, the pound, Aussie as well. Good, for sure, definitely we'll cover that too. All right, okay, just monitoring everything through the various chats as well. So just give me a time. I'll just make sure everything is streaming in correctly as well, streaming correctly, and I can monitor the messages as well. All right, okay. Right, okay, I think it's all good to go. Okay, so we've got a couple of few things so after last week's central bank bonanza, right? We had the Fed, Federal Reserve, Bank of England, Bank of Japan, um, even with the Swiss National Bank all dropping their monetary policy statements last week. So this week we've got quite a heavy calendar as well. We've got there's quite a few things going on, but I'll just highlight maybe two or three of the current maybe not more important one, but I'll cover three of the important ones. We'll have Australia inflation data on Wednesday, 12:30 a.m. GMT. So this is definitely going to impact the Aussie, of course, on this day. We've also got several FOMC members speaking, including Jerome Powell, as well as Governor Waller, I believe, right? So Wednesday, 10 p.m., and Fed Chairman Powell on Friday. Then we've also got US GDP out on Thursday, 28th of March. Then we've also got PCE data, right? PCE data, the Personal Consumption Expenditure Price Index. This is the Federal Reserve's preferred gauge of inflation. So we've got another inflation data point out of the US this week as well. All right, so let's look at Australian CPI. So on the left, I have the inflation rate on a quarterly basis, right? This is the annualized inflation rate in Australia on a quarterly basis. You can see that it's been trending lower right after hitting a high of nearly 7.8%, I believe, back in the fourth quarter of 2022. It's been trending lower. That's pretty good. And then when you look at the monthly CPI indicator as well, it has really eased quite considerably in the months of December of last year and January 2024. So the last two readings were about 3.4%. February's estimate points to a slight increase for the monthly indicator going up 3.5%. So should we see a figure that's higher than 3.5%, potentially we could see this could then potentially function as a short-term bullish catalyst for the Aussie dollar, right? So take note, February's estimate points to monthly CPI increasing to about 3.5%. Should we get an result that's higher than that, it's likely to boost the Aussie. Conversely, should we see the data come in line or the data print lower than 3.5%, then this is quite likely going to weaken the Aussie. Right, so take note of this. This comes out on Wednesday, March 27th, 12:30 a.m. Australian CPI data. Right, we've also got US GDP data that's out on Thursday, 12:30 p.m. GMT time. So this GDP data is for, this should be, hang on, for the fourth quarter. Hang on, this is just a slight typo here. It should be the fourth quarter of 2023. Right, so so January's result was actually, well, this is not January's, this was the previous result. This was the second estimate. Right, this was actually the second estimate. Right, right, okay, so currently the data that's going to be released is going to be the final data for the fourth quarter of 2023. So the second estimate saw GDP come in at 3.2%, and the final estimate is showing fourth quarter GDP expected to grow at 3.2% once again. So overall, in the US, at least over the last 6 quarters, you've seen relatively strong growth in the US. So similarly, if we see the final GDP data for the fourth quarter 2023 come in a little bit higher than 3.2%, that could potentially boost or create demand for the US dollar, a shorter term boost on this date. However, but most estimates are pointing to data coming in at 3.2%. So it's quite likely GDP is expected to grow in line with expectations, coming in at 3.2%. Probably no surprises here with regards to the data. Right. What is also going to be closely watched is the PCE price index. You have the core as well as the headline reading, monthly readings, and annualized readings. PCE stands for personal consumption expenditure. This is another inflation data point that's released by the US, and it's one of the data points that the Federal Reserve keeps a close eye on. That's going to be important as well. So coming into PCE release data, we had CPI data that were released in March, right? Just a couple of weeks ago, showing inflation in the US increasing strongly on a monthly basis, right? Although you can see on the left, I have headline CPI, on the right, I have core CPI. Both of these are the 12-month change or the annualized change. So you can see, at least on an annualized basis, inflation has eased quite significantly and does seem to be trending lower overall. However, when you look at the monthly data, right, the core CPI on a monthly basis and the headline CPI on a monthly basis, they've actually increased quite strongly as well. So there's a little bit of a concern that inflation could potentially re-accelerate in the US. And also it's a similar story for PPI. So PPI is producer price index. This measures the level of inflation in the wholesale sector. So similarly, on an annualized basis, left is headline PPI, right is core PPI. They have eased quite significantly for most parts of 2023. However, you do see PPI picking up on an annualized basis, as well as the monthly reading as well. You can see the monthly readings for core PPI and headline PPI came in higher than the estimates, which also created stronger demand for the US dollar in this third week, on the second week of March. Right, so finally coming on to PCE data that's going to be released this Friday. Similarly, when you look on the monthly basis for the headline PCE reading on the left and the core PCE reading on the right, you can see on the monthly basis they have increased very strongly in recent months. So we could potentially see this data point hint at inflation or hotter than expected results again. So February's estimate comes in at 0.3% for the core PCE price index, which is this chart on the right. So should we see a data point that's on result is going to be greater than 0.3%, this is once again very likely going to trigger strong demand for the US dollar as well. All right. So with that, let's move on over to the chart. So there's see a couple of requests coming in already. All right. Thanks, Nick. Thanks, Ren, for dropping a request early. Right. So let's start with the dollar index, of course, and then we'll work our way throughout the majors. We'll cover Bitcoin as well, and the commodities and any other requests that you may have. All right. Okay. So let's. Right. Okay. So here I am on the chart for the dollar index. All right. I'm on a daily time frame. Right. So as I mentioned, right, we had on the 12th of March with CPI data, which showed strong inflation potentially, well, data coming in hotter than expected, right? Then on the 14th of March, we also had PPI data, which was stronger than anticipated. And prior to that, on the 8th of March, we also had NFP data release, if you remember, right? An NFP number for that day came in higher than its estimate as well. So right, this was February's data point, February's NFPs actually came in higher than the estimate, which sort of helped to stop this reverse or the slide in the dollar index. Then you had CPI data coming in on Tuesday, coming in hot as well, followed by PPI data on the 14th of March. So all these three data points have helped to stabilize the dollar, right, as the dollar index as it was sliding, and it's actually helped it to not only stabilize but reverse to push it higher over the last 10 days or so, right? So because of that, you're seeing dollar index push very strongly now, and it could potentially continue to rise higher as we could kick off this new trading week, and where we could run into resistance is this overlap level here, right? So when I look across this overlap level here at 104.94, and we can see price finding support here back in 6th of November, right, as prices came falling down strongly over a period of 3 to 4 days. It found strong support here, bounced a little bit higher, made a little retracement to the upside before finally reversing to drop lower. And then in the mid of February, we saw dollar index make a significant swing high resistance here, right? Price was rising pretty strongly in the first 6 weeks of 2024, and the dollar index ran into strong resistance here in the middle of February before reversing to drop lower. So you can see a nice swing high resistance occur here as well. So this is how we've identified the first resistance at 104.94, which is an overlap resistance. Right. So basically, we are likely to see the dollar index resume last week's strong bullish momentum. Right, as you can see here, since middle of March, it has bounced quite strongly. We could see this momentum continue to extend further. So that means dollar index is likely to rise. It's currently trading, or it closed at around 104.43 last Friday. Right, it's quite likely going to resume its uptrend, and where it could run to resistance here is at this overlap level at 104.94, which is also a level that's identified by 61.8% Fibonacci projection, right? So how do we find this projection? We started this projection from here, point 1, on the 28th of December 2023, going up to point 2, which was 14th of March, and ending at point 3, which is here on the 8th of March. So you can see the 61.8% Fibonacci projection aligns very well with the overlap resistance as well. So it's quite likely we're going to see dollar index going to continue to rise, perhaps in the initial part of the week, and then it could, once it reaches this level, this is where it could run into some major resistance and maybe pull back a little bit, and where it could find support should a pullback occur or a bearish reversal occur would be this intermediate support level here at 103.68, right? So this is an overlap support as well, right? Because previously price ran into resistance over here in towards the end of January at 103.70, then it found support here at the end of February. So that's thus creating an overlap. So we have pullback resistance and a pullback support, creating an overlap level here. So this could be a potential overlap support should we see the dollar index initially rise higher first, run into resistance, and then pull back here. Right, so these are the key levels for uh, the dollar index, right? So take note, it closed at 104.43 last Friday. It's quite likely to continue or extend this bullish momentum, this current bullish momentum, and where it could run into resistance, as I mentioned, is at the overlap level here at 104.94, which also aligns very well with the 61.8% Fibonacci retracement. Right, so if we expect dollar index to continue rising, right, for the initial part of the week, that means currency pairs like the euro and pound are likely to fall. You could see dollar franc continue to rise, dollar CAD continue to rise, and of course we can expect Aussie and Kiwi to fall as well. But since there were a couple of requests for the Aussie, so let's move on to the Aussie first, and it's also very relevant for this week as we've got inflation data out of Australia on Wednesday as well. Right? Okay, so let's go on over to the Aussie, then we'll do the pound, then we'll cover Bitcoin as well, and then of course on any other requests that you may have, and if not, then we'll cover the commodities and um, the indices as well. Right. Okay. So remember, as I mentioned earlier, we are expecting dollar index to continue rising towards its first resistance, right? That overlap resistance level at 104.70. So if that were to occur, that means that's quite likely the Aussie dollar is going to continue to fall. So I've identified this level here at 64.96 as a pivot level, and you can see price finding decent support here on at the beginning of March, right? Price finding support here for a period of 4 to 5 days before bouncing higher. And because if we are expecting dollar index to continue to rise, then of course this is going to negatively impact the Aussie. So this pivot point here could be a potential sort of downside confirmation for the Aussie, right? So if you see the Aussie break below 64.96, it's quite likely we're going to see this current bearish momentum continue. And where we could find support for the Aussie would be at this swing low here. You can see this is a very significant swing low that occurred on mid-February, right? So this first major support is at 64.42. So if we do see the Aussie continuing to slide lower, drop towards this pivot point, which is going to potentially act as a downside confirmation level for us, then it's quite likely you're going to see the Aussie continue its slide all the way down towards the first support at 64.42. Remember, first support is indeed a very significant support level here. You can see price making a very significant swing low, right? You can see the market structure highlighting a very significant swing low. And because of that, this is a level where I think we can see the Aussie really find, or at least stabilize around 64.42. Right. So what about inflation? How could inflation impact the direction of the Aussie as well? Right. So with inflation data in Australia being released on Wednesday, right? So maybe for the first couple of days we will see dollar strength. So that would cause Aussie to break lower, right? And then should we see inflation data that comes in hotter than expected, then that's where the Aussie could stabilize potentially around the first support and reverse to make a weak bullish bounce, or probably a stronger bounce off the first support, right? So take note that how we can also expect the inflation data out of Australia on Wednesday to drive the direction for the Aussie as well. Right, hi, morning, Roy. Can we also look at? Yeah, for sure. We'll definitely cover gold as well. Yeah. If you if anyone's a little bit late to today's webinar, no worries. We'll start off. We started off with the dollar index, of course. Then we're going to look at the major currency pairs, and then we'll go on to Bitcoin, and then we'll cover gold as well for sure. All right. Okay. So take note, because uh, of the strong bullish momentum for the dollar index. I'm expecting dollar index to continue rising first, at least for the initial part of the week. And where you could finally run into strong resistance is at 104.94, which is this overlap level here that aligns very well with the 61.8% Fibonacci retracement. So of course, if dollar index is expected to rise, that means of course continue to fall. So the pivot level here at 64.96 is identified as a potential downside confirmation level, and I do really see strong support for the Aussie at 64.42. As I mentioned, this very significant swing low that was formed on the middle of February, right? In the middle of February, we saw very strong, we saw the Aussie stabilize very strongly here at 64.40, in the region of 64.40 before retracing higher. All right, okay, so let's look at pound. So similarly, if the dollar index is expected to rise, we can also expect the pound to fall, right? So since middle of December, we can sort of argue that the pound has been trading sideways at, apart from this level here that occurred on the second week of March, with the pound going as high as what is this 1.2895. But apart from that, generally you can see it's uh, been trading sideways, right? So despite the relatively stronger US dollar, pound has actually been more or less been more resilient versus the strength of the dollar, and it's sort of been trading sideways here since middle of December, right? So we could expect, since it has reacted negatively of this first resistance at 1.2796 in the middle of last week. It's continuing to slide lower on Thursday and Friday. We can expect this pullback to continue. Remember, as we mentioned earlier, we expect dollar index to continue to rise. So if that were to happen, and of course, um, the pound is going to fall, continue to slide lower. And where I could find strong support is at 1.2522, right? We can see price finding strong support here on 11th of December, as well as 6th of February and the third week of February as well. So this is indeed a strong pullback level here, pullback support level here. So we can expect dollar in pound uh, to continue to slide lower. And where you could find support would be around 1.2520 and then potentially make a bullish bounce and could perhaps continue to uh, extend this sideways trading range here. Right, so second support, just to highlight, just in case if we do see the dollar, but the pound break below this first support here, the second support is this overlap level at 1.23.83, right? And I believe I can probably do a Fibonacci retracement as well. Let's run a retracement from here. This low on the 4th of October going up to this high here on the 8th of March. Generally, you can see, all right, okay, 38 as price is falling down towards the 38.2% Fibonacci retracement. But it's probably we can use this retracement as well. Is there a 61 or 78 that I could use? Yes, there's a 61% Fibonacci retracement that aligns very well with our overlap support at 1.2383. Right, so I'd probably just like to highlight this as a zone as well here. Right, so after price making the swing high this pullback resistance on the 8th of March is sliding lower. We can draw the Fibonacci retracement here, and then we can see the 38.2%, the region between the 38.2% retracement and our pullback support at 1.2522 could potentially be a pretty strong support level for the pound once again. Right, remember, to the upside, this is a strong resistance level here. Of course, we did see price break above 1.2796 in the second week of March, but generally you can see that this level at 1.2796 is indeed a pretty strong pullback resistance level, right? Price running the resistance here on 15th of December, again on the 28th of December, and of course as recently as last week as well, Thursday and Friday, rather Wednesday and Thursday, last Wednesday and Thursday, running the resistance once again before reversing to drop lower. Right, so this is what we can expect for the pound. Oops, hang on, I need my retracement, but I'll get rid of these annotations. So with dollar index expected to continue rising upwards, right? That means pound dollar is going to be under pressure and fall towards this first support here. Oops, let me get my zone as well. Right. Okay. Right. Then let's see. Okay, we've covered pound, we've covered Aussie. Okay, we had a request for Bitcoin as well by Nick, and then also gold by Roy as well. So let's cover Bitcoin, then we'll do gold, and then perhaps we can continue with oil, right? WTI oil. We'll look at crude oil, and then probably we'll cover the indices as well. All right. Okay. And of course, any other request that you may have, right? Right. If there are any other requests for any other currency pairs, commodities, or indices, do drop them in the chat box early. so that we have time to go through the analysis together. All right. Okay. So here we are, Bitcoin, right? As we, for those who you have been following crypto, right? Bitcoin made a new all-time high very recently in the middle of March, going as high as what is this, $73,000. So it made a new all-time high at around $73,843. So quite clearly, this is going to be our first resistance for Bitcoin, right? So let's see, when was the last time price trading around this level? I think it was back in 2022 or 2021, right? So you can see previously, the previous all-time high for Bitcoin was at around 69,000, right? This was formed in November of 2021, right? Markets basically did a double top here pretty much in April of 2021 and then in November of 2021, right? This was essentially a double top here. Right, which price initially ran into resistance in the first week of March, right, on 4th of March. Price attempted to break above this double top resistance here. It did break briefly through it, but it reversed quite strongly and has reversed over the last couple of weeks, right? So after breaking through the previous high, making a new all-time high at $73,800, right? It has pulled back quite sharply over the last 2 weeks. So let's see what could happen, right? We could still see this bullish momentum take place, of course, after such a strong move in Bitcoin, right? Since the beginning of February, right? So for almost a period of 6 to 7 weeks, Bitcoin has risen very strongly. So naturally, we can expect it to pull back a little bit due to a combination of uh, what do you call profit taking as well, right? As price broke above the previous all-time high, we can expect a lot of traders and investors to take some profits at this level as well. So we could expect a pullback to occur, which is what we're seeing now over the last couple of weeks. All right, so let's get rid of this resistance zone here, and let's go back onto the daily time frame and try and analyze where we could see what could potentially happen as well. All right, so when I look across this price level here at around 62,900, this does look like a pretty decent support level, right? I would say probably this is more like a, yeah, this does look like a pretty decent overlap support. Why would I say that? I'm just going to highlight this as a pivot first. Why do I say that, right? You can see in 28 and 29 of February, price ran into a little bit of resistance here. And when it finally broke above, it found decent support, although you can see the wick on the 5th of March going below the support level at 62,580. But generally, you can see that this level, price managed to stay above this level, right? The body of the candle did not break below the pivot and then went higher. Then once again, finding strong support on 19th of March, pretty decent support on 20th of March, and once again has found support last Friday around this level. So this creates an overlap level here. So this I'm identifying this overlap support level as my pivot point, which is 62,580. So here we could potentially see price make a bullish bounce as well, right? So we may see price make a bullish bounce of this level here, right? But also take note, it's sort of been pulling back over the last 2 weeks or so, and especially Thursday and Friday, last Thursday and last Friday, it fell low as well. So potentially, it's sort of, this is in a limbo, right? For me, for Bitcoin, it could either go either way, right? So for this, you're going to have to be a little bit careful and see how the first couple of days plays out, right? Especially when market crypto is still currently trading, right? Crypto doesn't close over the weekend. It still should be trading, but generally we could see this level here at 62,580 is going to be a pretty important level, right? Whether it holds, is held, it's a level that's held since 4th of March, right? But generally you could see the bottom of the wicks protruding as well, so take note of that. We may see it attempt to break lower as well, but it may be able to consolidate within the region of 60,000, right? If you can consolidate within the region of 60,000 for Bitcoin, then it could then resume the uptrend once more, right? I think there may even be pretty decent ascending trend line, right? There's a pretty decent ascending trend line that I can draw as well. Yes. Right. So once again, right, so take note here. So we're at the intersection between this ascending trend line and this overlap support level here. So we could see price stabilize within the region of 60,000. And if that were to happen, then of course, then Bitcoin is quite likely to resume the uptrend. However, if this region of 60,000 doesn't hold, then I think Bitcoin is going to continue to slide lower. So where could be the next support level, right? Let's see when we zoom out on the daily time frame. There's probably a pretty decent pullback level that occurred here, right? You can see price running into a little bit of resistance here in December of 2028, right? As it fell quite sharply, it retraced a little bit higher, forming a little pullback resistance here on 27th of December 2021. But this could be an area where price could potentially find support in current times, right? Well, right, and it is also it is also a level where price ran into a little bit of a resistance here on 19th of February as well. So we had the first pullback resistance occur in December of 2021. Then this year as well, in the month of February, as price came higher, it ran into that previous resistance of December 2021, consolidated for about almost a week before finally breaking higher. So this, what was previously a pullback support level, could now potentially function as the first support. So that's how I identified the first support as well. I believe you can even run a Fibonacci retracement. Right, so let's start this retracement from here. 23rd of Jan going up to the all-time high at on the 14th of March. We can see once again that the 61.8% retracement level aligns very well with our first support, and the retracement at 38.2% is also in the vicinity of the 60,000 support region that I've identified. So take note, well, Bitcoin is at I would say, a pretty critical juncture at the moment, right? As I said, the pivot level of 62,580 is a pretty important overlap support level. And we've also seen this ascending trend line being formed as well. So we could see prices for Bitcoin stabilize around this region before resuming the uptrend. However, also take note, if this level of this region of 60,000 doesn't hold, then it's quite likely it's going to drop all the way down towards the first support at 52,100, which is also a level that aligns with the 61.8% Fibonacci retracement. All right, okay, so that's what we have for Bitcoin. Let's move on over to the gold. Right, so this really the ticker symbol is XAU USD. Of course, this is the symbol for spot gold prices. So of course, once again, if you're expecting dollar index to continue to rise towards the first resistance here at 104.94, then of course we can expect downward pressure on gold prices as well. Right, so we do have a pretty perhaps strong case for gold to break below the pivot point, right? This pivot level here at 2,144 is potentially going to be a downside confirmation level, right? As you can see, price making a previous high here on 4th of December, running into resistance around 2,045. Then as it broke above this level in the beginning of March, it found strong support for a period of nearly a week before bouncing higher once again. So this creates an overlap support level here at 2,144, and because we expect dollar index to continue rising, that adds downward pressure on gold prices. So we may see gold drop towards this pivot level here, and may even potentially break through it to drop lower. So this pivot level here is potentially going to be a downside confirmation level for us. But where would the first support come in for gold? If we do see price break below this pivot level, and the first support is this pullback level here at 2075, right? We can see price running into strong resistance here back on 4th of May, running into resistance here on 1st of December, and of course 4th December price briefly broke above it, running into resistance again 28th of December, and coming quite close as well on the 1st of Feb. So generally you can see this level here at 2075 was previously a pretty strong pullback resistance level, which is now potentially going to function as our support. So first support for gold is at 2075. Right. Let's see if there's any Fibonacci retracements that align with any of the levels we've identified. Let's start the first retracement from here. 14th of Feb going up to this all-time high. Remember, this is another all-time high for gold as well at 2222. Right, so once again we can see the 38.2% Fibonacci retracement aligned pretty well, or quite close to our pivot point. And of course we have the 61.8% Fibonacci retracement aligned exactly right aligned very well with the first support, which is our pullback support here. Oops, hang on. I want to adjust the labeling so it's just a little bit clearer for the 61.8%. Right, okay. Here we go. Right, okay. Maybe is there another retracement level that I could potentially draw? Let me see if it's worth drawing a retracement from here. Let's try this out. Okay, 6th of October, the swing low here, all the way to the all-time high. All right, okay, we can see that we 38.2 is pretty useful as well. It aligns with the 61.8. So you've got a Fibonacci confluence, right? You have confluence of Fibonacci levels, 61.8% retracement for this part of the move here, and a 38.2% retracement for this part of the move here, right? So we can use that as well. But we'll get rid of 61. We don't need 61. We'll just keep 38.2%. Right. Okay. So we have a Fibonacci confluence and the first support. We well, if we expect dollar index to continue rising, right? We expect the dollar index to continue rising towards at least the region of 104.94. Then of course gold prices are going to come under pressure, and this pivot point is going to be important. Pivot point at 2,144 could potentially act as our downside confirmation level, and if that were to happen, and it breaks below the pivot as well as the 38.2 Fibonacci retracement, then we can probably expect gold to continue to slide lower towards this pullback support at 2075. All right, hi Isaac. All right, yeah, we'll cover dollar yen as well. Yeah, great point to bring up dollar yen. We've actually seen uh, strength for the Japanese yen pick up quite significantly, right? Especially last week we had the BOJ. They increased their key policy rate, and it does look like, and also we are seeing inflation starting to increase in Japan, and we are seeing wage growth picking up as well. So all these uh, especially these data points, economic data points with such as wage growth and inflation, of course, is picking up. It causes the Bank of Japan to be more hawkish, potentially be more hawkish, and could continue to raise rates in 2024, right? So when you have all the other central banks becoming more neutral and even starting to cut rates like the Swiss National Bank, and then on the other hand, now we're starting to see the Bank of Japan turn hawkish, this is quite likely going to create stronger demand for the Japanese yen. So that means currency pairs like the dollar yen and the yen crosses like euro yen and pound yen could pull back and fall, right? So despite we're seeing stronger dollar, right, in terms of the dollar index, right? However, yen does seem to be seeing stronger demand, partially due to, or well, not partially, primarily due to the first rate hike by the Bank of Japan last week. Plus, we are also starting to see inflation and wage growth pick up in Japan. So that means the Bank of Japan is likely to continue to adopt a more hawkish stance as we move forward in 2024. So because of that, I see a strong resistance level here at 151.74, right, which has been identified as our pivot level, right? So previously, price ran into strong resistance at 151.75 on 1st of November, then again in middle of November as well, right, creating this pullback resistance level, and it's once again a level that has run into resistance since the middle of last week. Right, and also as I mentioned, with Japanese yen, the strength for the yen picking up, and we are starting to see potentially see a more hawkish Bank of Japan. We're likely to see the yen crosses pull back, and also see dollar yen potentially pull back as well. Right. Okay. So what about the next resistance for the dollar yen, which is highlighted at 153.03. Now this level was found by running a Fibonacci projection, right? So this projection started from point 1 here, which is on the 20th of December, going up to the high on point 2, or rather the high is here actually, the absolute high is here on 13th of Feb, and ending with the low, which is here on the 8th of, sorry, where is it? Yeah, 8th of March over here, which is, yep, 8th of March. So we do see the first resistance for dollar yen being highlighted by the 61.8% Fibonacci projection, because when you look out and zoom out, actually price already broke above the previous all-time high, right? If you remember, in October of 2022, dollar yen ran into resistance at 151.94 and reversed very strongly after that, primarily due to intervention measures by the Bank of Japan in the third and fourth quarter of 2022. Right, so this is level was tested in November 2023. It got rejected and dropped very strongly, and once again is being rejected around this region as well here. So right, this is a pretty strong resistance area for dollar yen, based purely on technical analysis. And of course, we are seeing wage wage growth and inflation starting to pick up in Japan, which is going to probably cause the Bank of Japan to adopt a more hawkish approach, right? So if they adopt a hawkish stance, then that means they're going to continue to raise rates in 2024. That means we could see the Japanese yen demand for the Japanese yen pick up quite significantly this year. All right, the first resistance, as I mentioned, is highlighted by the 61.8% Fibonacci projection level with a pivot point at 151.74. So potentially looking for a bearish reversal on dollar yen. And then the first support comes in here at this overlap level at 148.86, right? You can see previously price running the resistance here on 19th of Jan, creating a pullback resistance level, running the resistance once more on the 5th of February, and then as it broke above it, it found pretty decent support over here on 29th of Feb. Of course, didn't bounce off this level exactly, but came quite close, finding strong, decent pullback support level here on 12th of Feb as well, also creating this overlap level here. So we have an overlap support level at 148.86. Right, is there a Fibonacci retracement we could use as well? Let's try. We can run the first retracement from here, 8th of March, going up to the high here on the 22nd. I believe this is the 50%. Is this clear? Let me see if this is clear. Right, so it's 50 and 61. Right, so probably let's just keep 61 first, right? Let's just keep 61. Right, so the first support, where is this 50%? I don't think I need the 50. Oh, right, there was a, okay, hang on, there was another retracement here. Okay, I don't need, let me get rid of that. Okay, the double retracement. Okay, so we have 61.8% here. That aligns pretty well with our first overlap support. Right, okay, then, okay, is there another retracement? Let me see. I think I'm just going to see if I can do another retracement from here. 28th of December, this swing low, going up to the high here on, what is this, 22nd of March. Let's pull up all the fibs. Is there 38%? There's a 23%. So let me see if I can do a 23%. Right, okay, so we do see a Fibonacci confluence with having a retracement at 23.6% and retracement at 61.8%. Right, okay. There's probably 1, 2, 3. Is there anything else I can do? Let me see. There's probably one more projection level. Probably I can do. I'm going to run this projection from here, 13th of March, going down to the second point here, 8th of March, ending with a third point here on 22nd of March. Let's see. Let me pull up all the retrace projection levels. We have 61. All right, we do have the 61.8% Fibonacci projection aligned quite close to where the first support is as well. So let's just keep 61.8% and get rid of the other projection level. So we've actually got 3 different Fibonacci levels. around 148.86, which does seem to signify a pretty strong support zone as well. So take note about the Fibonacci retracement at 23.6%. We've got another Fibonacci retracement at 61.8%, and we also have another, and the third is a Fibonacci projection at 61.8% as well. Right, okay, and I also forgot to mention this, we have a Fibonacci extension as well, right? You guys can see this extension was found by running a retracement from here, this high here on 13th of December, going down to the low here on the 8th of March. You can see the 127% Fibonacci extension here aligned quite well with this pullback resistance as well here, right? So which once again, going back all the way towards October of 2022 was the previous all-time high for dollar yen. Or is it still the all-time high? Yeah, actually it is still the all-time high, right? If I actually look at it, right, exactly, this is still the all-time high. Did price breach it? Okay, I guess you could see, yep, it did hit it on 13th of November 2023, but generally 151.94 is still the all-time high for dollar yen, which is a strong resistance area, uh, as highlighted by the 127% Fibonacci extension as well as the pullback resistance levels here. All right, so these are the key levels for dollar yen. Right. All right. Okay. If there's no other request, then I'll just cover crude oil. So the instrument that I'm using for crude oil is XTI USD. Right. So generally, okay, let's zoom in a little bit here. So since middle of December, generally, okay, trading in crude oil or crude oil has traded has been pretty volatile, right? Of course, as you expect, unfortunately, with the ongoing geopolitical tensions in the Middle East and in the Red Sea, impact is creating a lot of volatility for crude oil prices. As you can see here, it rose strongly towards the end of December, but pulled back in early Jan, consolidated for a while around, what is this, $72 and $74 per barrel before spiking higher once again, and then as high as $79 per barrel, then reversing strongly and then going up again. So of course, it's been a very volatile period of 6 weeks, right? Over the last 6 to 8 weeks now, or probably even the first 3 months, right? The last 3 months have actually seen pretty volatile trading for uh, crude oil, but we could see, well, we're likely to see it pull back first after running to resistance here at $83.90 per barrel. This is an overlap resistance level, right? You can see price finding support here on 25th of October, then running into resistance on the 3rd of November, creating an overlap resistance level, which is a level where price ran into resistance once more on Tuesday, 19th of March. Right, so it's been pulling back over the last 3 days. It could potentially continue to slide lower here, right? So we've run a Fibonacci retracement from this part of the move, from this low here on the 5th of February, going up to the high on the 19th. You can see the 23.6% aligned quite well here. We do see a pretty decent overlap here as well. So this is a pretty strong support zone for crude oil. So if we continue, we probably going to see it slide lower the next couple of days, and then it could find strong support at our pivot level here, which is at $79.76 per barrel. Right, this is an overlap resistance level here. Right, price running into previously price running into resistance on 14th of November, 30th of November. We can even argue here on 29th of January, it came very close, running into resistance here once more. And of course, generally this area here in early March, right? Price failed to break above 79.79 convincingly. It actually pulled back. And then it finally had the bullish breakout here in the middle of March. So this creates an overlap, or this is a pullback resistance level here, where price could find strong support and then bounce to go higher. Right, there's probably another ascending trend line that I could draw as well from here, right? So you can see this starting this second ascending trend line from here, 1st of February, price bouncing off the trend line on 11th of March, 13th of March, and we see that the trend line intersects well with the pullback support, which is our pivot level, and the 23.6% Fibonacci retracement. And the next support level for crude oil is this pullback support level here at $76.60 per barrel, right? Price finding strong support here since the middle of February all the way till the middle of March, right? So for almost 4 weeks, price was basically trading above this level here before bouncing to go higher. All right, so this is what we have for uh, crude oil, right? So the instrument that I'm using for crude oil here is XTI USD. Right, okay. As we come towards the end of today's session, are there any further requests? We do have still do have time uh, to go through a couple more analysis, or to go through a couple more of your requests, should there be any. Okay, sorry, there's a question on trading view as well. Is the resistance and support shown by an indicator, or do I draw this? All right, Ajay, yes, I draw this support and resistance level by myself. It's not an indicator. Right, so basically we're looking for significant areas of resistance and support based on price action, and then I draw that level here. So for example, with regards to crude oil, right, as I mentioned, this is an overlap level here. Why is that? Because price previously found decent support here in towards the end of October 2023. Then when it broke lower, it ran into resistance here on the 3rd of November. So then this creates an overlap resistance level, which where price uh, did run into resistance once more on the 19th of March last Tuesday, right? So you can see how identifying or by starting the analysis on the daily time frame, right? You do a top-down approach, you are able to identify significant trends, right? You can see this is a significant bearish trend, then which where price bottom around $69 per barrel, and then price sort of consolidated, and generally you can see the trend for crude oil is to the upside as well. And then we can also identify major resistance support levels. This is another major, previously a major resistance level in the past, all the way till 11th of March, which now could potentially function as a support. And also when we look at 7660, this is also another strong pullback support level here. Right, so this is what we have for crude oil. Right, just okay. Dollar cat. All right, great. Okay, I think we can wrap up today's session with dollar cat. All right, Tatenda, let's look at dollar cat. So similarly, if we expect dollar index to continue to rise, quite likely this is going to pull up dollar cat as well. However, take note, this first resistance here is pretty strong. Right, it's an overlap resistance level here at 1.3629. Right, you can see price finding strong support here. You can see the market structures, it pulled back strongly in early November 2023. It found strong support here to bounce higher and came back close to this level again on 15th of November. You can argue as well, finding pretty decent support just above this level to retrace a little bit higher before finally breaking lower. Then when it broke underneath it, it ran into resistance here 30th of November, the resistance again on 7th of December, and again 12th of December as well. And then you can generally see this zone here has acted as strong resistance as well, right? This zone that's bounded by the 61.8% Fibonacci retracement and this overlap resistance at 1.3629. Right, so this retracement level was found by starting from here, this high here on the 10th of November, going down to the low here, which is on the 29th of December. So you can see this region that's bounded by the 61.8% Fibonacci retracement and this overlap resistance at 1.2629 is indeed a strong uh, resistance area here. So we could potentially see price stall around here. I guess there's probably a weak chance that we may see a bearish bullish breakout, right? There may be, especially if dollar index continues to rise strongly, there may be a case that we may have a potential bullish breakout. However, I think quite likely we're going to see prices at least pull back, right? I think prices are going to pull back around this region of the first resistance. Maybe it will not break above this level the first time, we may see it run into a little bit of resistance and then make a slight pullback as well. And if you look at how dollar CAD has been trading since the 9th of February, actually you can see it's sort of been uh, trading in the sideways range, right? Going from about 1.3450 to about 1.3600, right? So basically this region here, right, we are seeing like sideways action, right? You can see here quite clearly it's been trading in a sideways pattern since the middle of February. So going from about 1.3450 to about 1.3600, sideways pattern. So because of that, we may see this sideways range trading to continue. So we could see dollar CAD just potentially run into resistance around here and reverse the drop lower and continue to trade within this uh, between these two levels. Right. Okay. First major support for uh, dollar CAD, should it break below this pullback support level here, is going to be at 1.3367. Right. This is a pretty significant overlap level here. It's run into strong resistance here on July 2023, finding strong support here on 19th September, and then once again finding strong support here on 1st of February. Of course, price broke below it here at these 2 points, which was in 19th of December and then 10th of January. But generally, you can see this level here and 1.3367 has functioned, has been pretty significant, which is why I'm going to continue to use it as a first support here. Right. Okay. Let's see. Then Fibonacci retracement I could use. Okay, perhaps let's try to run a retracement from here. This swing low here on 29th of December, going up to the high would be, which one is the absolute high? Is it this 36135? Yep. So this is the high here that occurred on Friday, and then if probably is at 38, I think you probably use 38, and is it 60? Yeah, 38 and so let's keep 38 and 61%. So you can see the 38.2% Fibonacci retracement level aligned pretty well with this pullback support level here at 1.3449. And we can also see our first support, uh, or rather the 61.8% Fibonacci retracement lies quite close to where the first support has been identified here. Right, so these are the key levels that I see for dollar CAD. And all right, okay, so that's the analysis for today. Thanks everyone for tuning in to today's session. Right. Take note, we'll just wrap up with dollar index. These are the key levels of the dollar index. So if we expect dollar index to continue rising in the initial initial part of the week, then of course we can expect currency pairs like the euro and the pound to continue falling. Aussie and Kiwi to also continue falling, and of course it's going to negatively impact gold prices as well. We could see gold prices continue to slide lower, and we may see dollar franc rise higher, dollar CAD potentially rise a little bit higher as well. But we do see strong resistance for dollar CAD in that region of the 61.8% Fibonacci retracement. Right. All right. Thanks, Roy. Thanks, everyone. And just before we end, right, just go back to right, just take note of the economic events that are coming out this week. There's quite a few things going on, but take note, we've got inflation data out of Australia on Wednesday, 12:30 a.m. GMT time. We've also got a couple of Fed officials speaking. We've got Governor Waller on Wednesday, and then of course we have Chairman Jerome Powell on Friday. We've also got US GDP data as well as Canadian GDP data out on Thursday, 28 March at 12:30 p.m. GMT time. Okay. We've also got Aussie retail sales on Thursday as well. That's going to impact Aussie, of course. We've also going to see CPI data out of Japan as well. This is going to be closely watched as well, like especially after last week's strong CPI, national CPI data last week. We're going to see Tokyo's CPI data come out, and of course we have the Federal Reserve's preferred gauge of inflation, which is the PCE price index, coming out on Friday as well. Right, so take note of these economic events for that's going to impact the dollar, the Aussie, dollar yen, and of course dollar CAD as well for this week. Right, and before we end, we'll just wrap up with the ending and disclaimer. All right, so take note of the risk warning that comes with trading forex, CFDs, and trading forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. All right, thanks everyone for tuning to today's session, and do look out for all upcoming webinars by IC Markets for the rest of this week. All right. Take care and have a great start to the trading week, everyone.